Good morning and a very warm welcome back. This is Rachel live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 studios and you're watching the early trades. The commodity supercycle and economic recovery prospects are fueling an equity market rally. However, inflation expectations and virus concerns are capping the global equities gains. On that note, let us cast an eye over how market chart is panning out today. Well, defying virus woes and inflation anxiety, the ASX 200 is charged up today given upbeat US economic data and robust commodity prices. Ahead of the quarterly GDP data release, the ASX 200 soared 0.5% during the early trading session. Energy and the materials sector gains are outweighing a dip in the healthcare and IT sectors. ASX-listed stock engineering solutions firm Worley is the leading gainer on the ASX so far today. The company reports that they're on track for an improved second half performance in financial year 2021. The company's order backlog stood at $14.1 billion, up from $13.5 billion in the first half. They added that sales pipeline of financial year 2022 is 25 times the achieved sales of financial year 2020 under low carbon hydrogen. ASX energy stocks witnessed their best day in 2 months amid favourable oil price dynamics. Australian energy players Santos and Oil Search are among the top 5 ASX 200 gainers so far this morning. Woodside Petroleum and Beach Energy are also facing a green trading session. Crude oil prices settled higher on Tuesday, with Brent crude futures hitting above $71 and trading at its highest level since March 2021. The increased price has been supported by growing expectations for an increase in fuel demand during the summer driving season in the US as OPEC Plus agreed to boost output. Global oil cartel OPEC plans to increase its oil output by 450,000 barrels a day starting in July. Meanwhile, over in the US, President Joe Biden's administration plans to suspend all the oil and gas leases of the Alaska Wildlife Refuge that were allotted during the final days of Trump's administration. Moving on now, a huge surge in iron ore price seems to be a catalyst for iron ore miners today. Heavyweight miners such as Fortescue Metals, Rio Tinto and the BHP Group are the leading gainers on the board. The iron ore price continued the rally for the third straight day on Tuesday as China's benchmark iron ore futures surged more than 7%. Boosted by reports that steel hub Tangshan plans to ease the requirement for production cuts at its mills. Next, shares of fintech and neobank Dough jumped on announcing its partnership with OFX Group to offer its foreign exchange services. The company has entered into a partnership with OFX to offer its foreign exchange services. The AI-powered financial well-being app provider said that the long-term partnership was expected to benefit its customers from OFX bank-beating exchange rates. The Australian foreign exchange provider would be Dough's exclusive partner for foreign exchange for Goodmans by Dough app. Dough also says that the partnership with OFX could be extended to offer international money services as an integrated feature in the Dough banking app over time. Dough's founder and CEO Andy Taylor says that Forex was expected to become a key component of the platform over time as the company looked to facilitate investing in US securities. OFX Group's Asia Pacific President 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 says that the international investment, particularly equities, have been a growing market for the group. So partnership with Dough would be an exciting task. Under the partnership, the Australian customers would pay a Forex fee to convert between the Australian dollar and the US dollar to buy and sell US securities. OFX would pay a portion of this fee to Dough as a revenue share. The new partnership would start immediately with an initial term of 3 years unless terminated by the company. Dough competes with AUB Group, Janus Henderson Group, the Net Wealth Group, Hub24, the Commonwealth Bank of Australia and the National Australia Bank in the financial sector. Well, now it's time for a very short break. Stay tuned. I'll be back in a moment to share more updates on ASX listed trending stocks.
Property by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐴LKIND TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐴LKIND.
Hello, this is Rachel live from 𝐊𝐴LKIND Studios and you're watching the Early Trades. We were discussing market performance in ASX listed stocks on trending shows today. Now let's look at the bottom performing stocks in the ASX 200 today, representing some of the gold stocks. Australian gold miners, Regis Resources and Silver Lake are leading the ASX 200 losers pack. Northern Star Resources, De Grey Mining, Gold Resources and Ramelius Resources are also slipping lower. On Tuesday, gold slipped below a near 5-month price peak hit earlier during the session as robust US manufacturing data and higher treasury yields dented its appeal. Healthcare stocks, Ansell and Sonic Healthcare are sliding lower on fears of the coronavirus woes. Victoria's 7-day lockdown is set to be extended today after a meeting of the state's crisis cabinet last week. It's unlikely whether the 1-week lockdown to contain a fresh COVID-19 outbreak would end as planned as the state grapples with a growing virus outbreak. Australia's second most populous state was plunged into lockdown on the 27th of May after the state reported its first locally transmitted cases in almost 3 months early last week, forcing its near 7 million residents to remain home, except for essential business. Victoria's reported 6 new cases this morning. There are currently 67 active cases in the state. Moving on to other news now. Shares in infant formula player Bubs Australia are sliding lower amid its response to the ASX price query. Bubs stated it's not aware of any information concerning it that has not been announced to the market, which could trigger in the recent trading in its securities. The company further stated that it's only aware of the publicly reported news that the Chinese government announced it's scrapping a policy limiting couples to 2 children and will now permit families to have 3 children without financial penalty, with the formal introduction of a 3rd child policy. Well, it's time for a short break now. Stay tuned as I'll be back in a moment to share more updates on ASX listed trending stocks.
Property by 𝐊𝐴LKIND. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐴LKIND TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐴LKIND.
Hello, this is Rachel live from 𝐊𝐴LKIND Studios and you're watching the Early Trades. We're discussing market performance in ASX listed stocks on trending today. Let us now zoom our lens on what lies ahead to drive the inflation concerns in the market. Overnight, the US indices touched levels close to an all-time high as investors cheered signs of an improving economy ahead of a week packed with major economic data. However, by closing, all 3 major indices were trading flat from larger gains notched earlier in the session, leaving US stocks mixed. Perhaps investors took cues from the rising international oil prices that could potentially aggravate the inflation rate. Investors fear high oil prices might increase volatility in the markets. In a deviation from the past, the Federal Reserve also has allowed inflation to rise above the 2% mark to manage the economic downturn. Although a rate hike has been ruled out so far by policymakers, inflation worries continue to weigh on investors' minds. Basically, new US jobs data said to be out on Friday should also give a firmer steer on near-term Fed policy action. This week's main event is Friday's US payrolls data release, with markets cautiously waiting for a signal from the central bank on when it will start tapering its bond buying program. The median forecasts are that 650,000 jobs were added in May, but the outcome could have a deviation following April's unexpectedly weak gain of just 266,000 jobs. Lastly, the crypto space deserves a closer look as well. Bitcoin traded 2.59% lower at $36,311 on Tuesday, while its peers Ethereum and Dogecoin were down 4.75% and up 4.02% respectively. So what is causing the crypto market volatility over the past few days? Well, basically, the major reasons for the recent downtrend in the crypto space, as we've reported earlier, include Tesla chief executive Elon Musk's confusing tweets on the dependence on Bitcoin as a means of payment, along with a crackdown on cryptocurrency regulations in China. China's central government has vowed that it would hand out severe penalties for illegal financial activities, specifically targeting Bitcoin mining and trading. Adding to their woes, US President Joe Biden's budget proposal is to include several new crypto reporting requirements has further dampened investors' sentiments. Well, that's all for now. We'll be back with more stock-related updates for you in the coming shows. So please stay tuned with 𝐊𝐶𝐼NE TV. I'm Rachel, signing off for now.